Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Friday, August the 7th. The year's 2020. Let's talk trading. It's time for the weekly wrap-up in NFP Day. In fact, I just got off the phone with Walter and Ira, Walmall and Ira. So, as you're watching these videos, remember, these videos are for educational purposes only. Your results may differ from mine. And trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. NFP Day, non-farm payroll. Well, it's not what it used to be, but there's still a lot of money to be made. And there's also the possibility that you lose a lot of money. And that's why you have to have your risk management in place so you don't lose more than you're willing to lose per trade. And this day can really mess with your brain. In fact, Walmall and I, we're trading, and we're trading the pound, and it had, NFP, it already shorted it once, and I picked up, I don't know, a couple of pips. I think it was like 2 or 3 pips. And then it was going up. And it was going up, it passed 90, and I'm like, I'm shorting at the double low, even though price is going up. And it goes up to double low, and it keeps going, it hits 05, and I'm thinking, if it hits 10, I'm going to short again. Well, it didn't quite hit 10. So then it started dropping. Long story short, I got out with 10 pips at 90. Well, when I show you the chart, you're going to understand why I told Walmart just to shoot me. But, sometimes you have to take the profit before the market takes it back. But, with the brain management, you can't have the ROGO, the regret of getting out, okay? It's like you make that decision in real time, and what happens next is really of no concern because you're out of the trade. You just have to remember that. So you can see here, we went through the previous week's high. I think I pointed that out yesterday, and we fell down. For anybody just tuning in, we filled all the weekly open gaps. Now look at here, sports fans, trading fans. I showed you this chart, and I show it to you every day just about, but we opened inside the range of the opening range for the year right here, okay? But you see we wound up coming back out of that opening range. That's like there you go. You can see the entire, from January 1. You can see here we fell out of that. And not only did we fall out of that, we actually touched the low of the opening range, and we bounced. So these numbers, come into play, and that's why, we have them on our charts, just so you know. See, we opened below the mid dot, and the rest was history. In fact, we're even down for the month now, 26 pips. We went through that monthly open. And I think I pointed out to a few people, and I still haven't fixed this screen. I'll have to remember to do that. That when we hit these, the high for the month or high for the week, now, trading out of that rat zone, well, you can see here, the rat zone's usually 20 pips off the high. Well, here's an 80 pip, well, now 80 pip difference there. So if you would have been short when this equaled 20, now 100, you'd be up 80 pips on that short. It's just something to keep in mind. NFP day, and only 4 pairs are over 100 pips. Once again, NFP ain't what it used to be. You can almost make a song out of that. You can see the pivot point was within the buy zone, so no bias, just trade what you see. And you see here, there was some short trades. There was a missed pivot point that we picked up right there, took that pivot out. Green rats were feasting here. Oh, and the rat zone, I've updated the rat zone. In fact, I sent it, I talked about I was going to make an update. Let's see if I can find a pair that shows it. I can show you what the update is. And I'll be sending or posting that indicator right here. Weekly upper rat zone, monthly upper rat zone. So today's rat zone for the Aussie Canadian, This daily rat zone is also the weekly and the monthly. Okay, so if you get short here and the month keeps going down, you could pick up some big pips. So if we go back to the pound, and let me just scrunch the chart, you can see right here, yesterday, this was the, as I was mentioned earlier, this was the daily rat zone equaled the weekly and the monthly right here. And so you see price fell out of it, and that was the trigger line right there. And you can see what happened. So that's why I put those alerts right there. Well, not really alerts, but just indicators, or just a help telling you what's going on with the with that rat, so you can think, maybe I'll get lucky and ride it. Okay, so once again, we took out the pivot. Let's take a look at the miss pivot chart here. So you see we had a miss pivot here, I believe, and I believe that was a miss pivot. We took out those, and because I think yesterday we had an August miss pivot. Maybe we had a couple of August miss pivots and we took them all out. And as far as the weekly, once again, we took out that weekly pivot. Wick zones, in and out, in and out. And just so you know, sometimes people get things confused. The wick zone is based on yesterday's daily candle. The rat zone is based on today. Okay, don't get those two confused. Some people do that. Looking at the smart ranges here, you can see high minus low, 139 pips today, 71 percentile. Right before NFP, I think this number was somewhere around 70 or 80, and it was like, there's more gas left in the tank, a lot more. So that's why I was looking to go short. I went short on this candle. I went short against the H1 candle color, just because I figured, looking at the price action and looking at the range, I'm going, this range has to expand. Now, it's already below the previous day's low. For this range to expand, what's it more likely to do? Push up here or push down here? To me, that was just kind of an obvious thing. But those are the types of things, it's like, hey, it's a guess. And, it's a guess based on statistics and just based on experience and based on just looking at the chart here. We've cracked the previous days. Here's the previous day's high. Here's the previous month's high. And so, and price is right here at 31. And it already had dropped down once. So what's this? These are pullbacks. It dropped, it pulled back, 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 it dropped, it pulled back. What do you think's going to happen next? Oh, sure, it could have done that. And that's why we have stop losses. But it didn't. It did that. I was just a dummy, and I stopped and I took my profit at the 90 level. And I left all that on the table. As I was telling Walter, I said, I went in and I filled up a shot glass instead of filling up my 5-gallon bucket. But hey, that's Harry hindsight, right? But here you go again, looking at an M1 chart that I can use to scalp. Looking at the mid dots, it put in a 3-ball open below the mid dot. You just go short. Yeah, maybe you took some heat, or maybe you just took your 2 or 3 pips. That's just how it works. And price action. Somebody asked me about the price action training wheels indicator here, and they wanted to know what's going on with it. And so I'm going to pause the video and I'm going to open up the code for you. Okay, here's the code on the training wheels. Training wheels PA indicator. And so let's come down here. So you see I'm working with the current open, high, low, and close, and then the previous one, and I calculate the midpoint, look at the candle color, I look at we're having a higher, higher, higher low. So what's it saying? If we don't have a higher, or if we don't have a lower low and we don't have a higher high, we wait. Okay, so if the candle color is red on the right here, the candle color is red. I'm sorry, because this, if candle color, that would be green. So this exclamation means not. So if the candle color is red and we have a lower low, or we don't have a higher high, we sell. If the candle color is green and we have a higher high and we don't have a lower low, we buy. That's the simple price action trade. Okay? It's nothing really complicated. It's something you can see with your eyes, but you know, as you're learning, you might not think of it, or you might not see it. So right here we got a price action trade buy. So where should we have gotten long? Actually, should have been long at about 54, which is 54.7, call it 55, the previous candle, H1 candle. Why? It's previous H1 breakout, and it's before the wall line. Now, if you were going short, you'd short at 50 because the previous H1 low is down here. So if the previous H1 high is between the wall lines and you open below it, you can take that breakout instead of waiting for the wall line. That's just something to know. Once again, price action trade buy. Higher high, higher low, because it's not a lower low. Candle color's green, you buy. Very, very, very simple. And in fact, I was on the phone, like I said, with Walmart and Ira, and I was kind of teasing Ira about the squiggly lines, and Walmart said his take on it is, you know, you can make money with it because lots of people do, but why not do the easy, simple thing? The simple thing, trade a horizontal line break. And for those of you, I'm getting a lot of questions about the London breakout, and I just want you traders to understand, a breakout is a breakout. You put an upper threshold, you put a lower threshold. When price hits that threshold, you enter in the direction price is moving, and either it breaks out or it doesn't. So for example, right here, if price is here and you go in at 3110 or 3100, price hits here, if you go long, it didn't break out. If price hits here, you went short, it broke out. That's it. It doesn't matter if this was the London Open breakout or the Asian Open session breakout or the first H1 candle of the New York session. A breakout is a breakout. The only thing you do with the breakout is you run some statistics to see if there's an edge on maybe that particular breakout, or you run the statistics to see when it breaks out what you can expect to get out of that breakout. Because that's all you do here. It's nothing that difficult. It really isn't. And there's no reason to make trading more complex or complicated than it is. Now, if you didn't take this breakout here and you're waiting for the 60, well, we haven't quite hit 60 yet. So you wouldn't have got it. So hopefully that answers those questions. So fellow traders, please subscribe if you haven't, and please like the video on YouTube, on the YouTube channel. Liking it on Facebook doesn't give me any YouTube points, and I need the YouTube points. So I hope you had a profitable week, and I hope you have a fun and safe weekend. Be safe out there, everybody. And when you come back to trade next week, just remember, it's not what you trade, it's how you trade it. So drain the banks. TheRumpledOne signing out.